Hey, SADnation, what's going on? Happy Thursday to you, or happy Friday. Just wanted to come up to you with a quick video about the market recap slash SADucation to give you a little bit hybrid. Wanted to kind of do this just to show you to start opening your eyes and look at price action a little bit differently from a different view, different angle. And especially if you've been following me, you know that I trade a hybrid style with order blocks, liquidity, the strat, supply and demand, old school technical analysis, looking at candlesticks, looking at the patterns, etc. Right? I use a variety of techniques in order to trade, and also that is what helps me be able to analyze price in a more accurate way. This evening, I loaded you all up with a bunch of tweets telling you to look at the charts with nothing on it, and then I started putting back my data that I usually provide to you all in terms of the pivots, the levels, etc. It's all the stuff I give you all pre-market or the night before the next subsequent trading day, right? What you're seeing right now is the yes futures on your screen. Like this is already what has happened today, but I have not taken out any of my data points. Right, you can see that we still have the month low. We have these lines here that I drew out. Right, this is what this was 8:30 in the morning. Once econ data came out, I said it was bad. So I'm like, I'm expecting it to follow the yellow line. Right, you know, it came up and then took the dump. Right, we literally got that. You know, they followed to the T and then it bounced, right? Again, you can see this is, you know, last night we were shorting it and we hit our target. And then I said, once we short it, it's going to bounce up. And I drew this inverse head and shoulders, right? We were right about somewhere around here when I drew it. And I'm like, okay, it's going to hit this and go up. Anyway, that's not the point. What I really want to show you was this. I asked you all, I was like, hey, look at this naked chart and tell me where you would have entered, right? Let me just mark off the time, right? So that way you can see here's 9:30, right? And here 4 p.m. right here, right? The two blue lines, vertical blue lines are the regular New York trading hours, right? So look, I don't want to talk about here. There's a bunch of reasons why we couldn't. Here, I really wanted to fixate on this area because this would have been the safer area to trade, in my opinion. Up front, you know, the 9:30 open is always volatile and gets a lot of people shaking out. So this would have been it right here, right? A lot of people like to wait for the market to kind of unravel itself and then either play reversals or wait for a key breakout somewhere. There's a lot going on in the charts right now, and I know that, right? So you just have to kind of bear with it, especially if you're somebody's new and you just found my tweet randomly somehow. It is going to be very confusing, you know, but just bear with it. Look, let me show you something, right? So at 12:16 U.S. Eastern Time, I'm going to show you this on my screen, right? You can see it right here, 12:16 U.S. Eastern Time. I drew this out, right? It's called the zone, which is right in front of your screen, right? We hit the lows, we hit the target, we hit the first target. We shorted this. I mean, I shorted it in the morning. I gave everybody um, the awareness that I was taking short. We got that, and then it started bouncing, right? It started reversing, and I was like, okay. I drew the zone because it's bouncing. I knew that was going to come back up. That's the reason why we drew that, because it's what we're looking for. We're looking to see for it to hit this zone and then see what it does. So you could have taken the long. A lot of people didn't, just because they were still hesitant and fearful that, oh man, we're making this low. We're, you know, we're probably going to dump some more. So that you didn't take it, which is perfectly fine, right? The reason why this was such a good place to take a trade, whether it was a continuation upside or a break to the downside, is multiple reasons, right? Look, this is the zone. The zone just means that this is where we're going to have a battle. This is where there's a lot of supply, a lot of imbalances and whatnot, right? If you look at previous candles here, you can see so many wicks here, right? Wicks, wick, right? This is essentially just trapping people that went long here, right? That's just sharp price movement. And then we have some more here. But what you can see is that every time we hit this area, we just rejected off it, right? So look, you know, pretty much from 9:50 all the way until 1 o'clock, right? 1, 2, 3, 4, 5, 6, you know, 7, 8, 9, 10, 11, 12 times we hit this kind of this area right here, right, which is pretty much what 44.25 and to about 44.29, right? We just kept hitting it, just could not break it, right? And I am personally drawing trend lines. I already had this trend line drawn pretty much from 1240 and so on, because I wanted to see if it was going to continue up or we're going to break, because I was still bearish for the day. I let you guys all know that, just because I'm like, we're going to continue to take out that low because SPY has not taken out yet. Here is the real kicker, right? So we have this. Here's a couple of things that we could have used for confirmation to take this trade to the downside. This is what I want you to think about, right? A lot of people were just like, okay, we broke out, came back, pulled back, and retest, and then failed to break in, so we're going down. That is absolutely perfect. If you said that, give yourself a pat on the back, because that is right. That is old school technical analysis, right? Breakout, wait for the pullback, wait for the retest, confirmation, get in. Nothing wrong with that. That works beautifully. And if you trade like that, you will win a lot of times. And if you trade consistently in terms of your sizing, every single trade, you will come out on top. A lot of people don't realize that. So do not discount that. What I wanted to point out in this aspect was this. Look, so this is on the 5 minute. So we just gave you a couple of things, right? Breakout, pullback, confirmation, failed, and then come back down, right? That is number one. Number two is that we could not break this zone, right? Told you about this zone already, right? 12 times we hit it, couldn't break it. So we already knew that. If you look here at 1 o'clock, what you're getting to notice is that when we failed to continue further up, right? This is essentially this is literally a double top. Like, look at that. Double top. 1, 2. So that's another thing to look at. The third thing to look at is this. At 1 o'clock, you can see on the bottom screen, the previous candle at 12:55. This broke up, took out the high, failed, came back down, took out the low. So what is that? Well, if we're trading the strat, it's called an outside bar, or a number 3 candle, right? If you're trading traditional technical TA, that's called a bearish engulfing, right? Went up first, failed, took out the low. That tells us that the sellers are in control. On top of that, we had a double top. We could not break this zone. I had a downward trend line that I drew from a while ago. It's still here. We broke above it, failed, came back down, right? You didn't need to take the trade here. That just gave us confirmation that, okay, the bear's in control. The next candle, subsequent candle at 105, right? We didn't want to take this yet just because, you know what? We still had this downward trend line that was holding it up. But look what it did, right? So this was a 3. This is 2 down. This was an inverted hammer, right? So we know that in the strat, there's the combination of 3-1 or 3-2, right? This would have been 3-2, and then we have a 3-2-2, right? So you could have taken this as well. You could have traded this. There's nothing wrong with that, right? Let's say you didn't take this trade here, right? But you waited for the break on this low. You could have netted 3.5 points, right? That's about 14 ticks, right? That's a good amount of money on ES, right? You're talking about a few $100s per contract, right? If you dump 5, you could have made a quick, $1,000 or $1,200. You dump more, etc. If you did not enter here, that's perfectly fine, because we're looking at this trend line. We waited for the breakout, broke out, came back down, pulled back. Okay, so we're not confident yet, right? Based on turtle. Now we pulled back and we failed. But here's the other thing, right? Again, this was a 2 candle, 2 down. This was a 2 up initially, failed, came back down, became another bearish engulfing or outside bar candle. And it was an inverted hammer. So this is what I would consider an actionable signal, meaning that this is our key to get in here. We would enter here and we would set our stop pretty much at the high of this zone right here, right? So we were looking at 44.23 and our stop would have been at 44.27.5, right? So you have about, and we're targeting low of day, which was at 44.11. So you're looking at 11.5, 12-point move down reward for a what, 4-point risk, right? So almost 3 to 1, 2.5 to 1, right? That is just how it works. A lot of people are unwilling to do that because when they see this go up, it is a big number depending on how many contracts you get. But this was our actual signal. It was an inverted hammer, outside bar, bearish engulfing off a trend line break, right? On top of all the things we talked about right here in terms of, hey, it failed to break the zone, it had the double top, we had a series of bearish engulfing, inverted hammer, etc., right? That is on the 5 minute. Let's switch to different time frames now, right? And it's gonna kick me back, and I apologize about that. Okay, now if we go to different time frames, right? This is 10 minutes, right? At 110, we did the pullback, failed. We had the inverted hammer again, right? You could use that as your confirmation. Now let's look at the 15-minute real quick, right? Same thing with the 15-minute, right? Pull back down, pull back up, failed, right? You could have gotten in somewhere on the 15-minute here, but the real one that I like to look at is the 30-minute, right? If you look at the 30-minute, you can see that this, right? Let me just remove all this so it's a little bit easier to see. So this was an inside bar, right? This was an inside bar. And we like to trade inside bars, right? So we came up, failed to continue up. We had that double top, and then we came back down. So on 30 minutes, we had a outside bar, bearish engulfing, right? On 30 minutes, that is a powerful, powerful candle, right? So even if you didn't get in at this, you could have entered around 130 because now we're looking for a 3, 2, right? This is our 2. This broke the low. You could enter at 44.13, and then you could have wrote it, right? You would be targeting the lows of each candle, like 44.1125, and so on, and you would scroll all the way back to see where the next candle is, right? Here's the next candle, 44.09, right? So even then, you would have gotten anywhere from 2 to 5 points move. So the point of this is to show you that look at multiple time frames, right? Do not just look at one time frame. If you stick with one time frame, you're not going to see the entire picture, or you might not get the confidence you want. I mean, we could even go to a 3-minute and look at it. Right? If I do this, it might be a little bit easier. Look, broke out at 109, failed, pulled back, inside bar, went up, tapped the trend line to the penny, failed to go continue up, came back down, did an outside bar, bearish engulfing. Next, even if you entered here, like I said, you entered here, your stop would be above here. Came back up, failed, came back down, and then the rest is history, right? So that is what I want you all to start looking at, right? Do not stick on one time frame. Look at multiple time frames. Utilize what you've been taught, right? Whether it's the strat, whether it's liquidity, supply, demand, whether it's trendline breakouts. Do not forget what you have learned in terms of the traditional breakout, pullback, retest, confirmation, and whatnot. The candles itself, the shape matters, right, guys and girls? It does, right? I told you that many times that what this is showing us is that the sellers are in control. The sellers here. Buyers try to push it up, boom, strong rejection. Same here. This was not a inverted hammer, but we can see that the body was much lower than it did traditionally if it was a doji or certain time where it'd be in the middle. And remember, the larger the time frame that this happens on, the stronger it is, right? So I just showed you later on the 5-minute, we had so many indications to tell us why to get in here. Anyway, boys and girls, hopefully that gave you some insight, some things to think about. Again, this is for educational purposes, not financial advice. Give this video a thumbs up and like and comment. Thanks. I will talk to you all a little bit later. Bye.